Getting to managing wealth now across generations, it's about far more than numbers on a balance sheet. It reaches into family dynamics, values, and long-term vision. Let's get now to someone who helps families navigate that terrain, Peter Leggett from Arrow Private Wealth, joining me now. Peter, great to have you with us.
Thank you. Good morning.
Good morning. Just tell us what you're doing at Arrow Private Wealth more broadly.
So we're talking to a lot of clients about this whole transfer of wealth area. It's the numbers keep climbing. It's somewhere in the order of 4 trillion, maybe more than that now as well. And what we're seeing is a real conversation changer. And in many ways, the families now are talking about, well, with their children and involving their grandchildren about setting up these conversations around what their family wealth looks like. So it's a lot more than just something that happens at end of life where they open up the will and see what's in it as well. Modern affluent families are basically shifting to what we call a living legacy conversation.
And so with that living legacy, I assume it means other trends, so philanthropy, education. What are you sort of seeing here in terms of how you help these people try to maneuver that?
Sure. If we use the terminology, the affluent marketplace, we did some research just recently, and it was interesting what came out, their key concerns. Their number one key concern was preserving family wealth. So when you look behind that and you say, okay, so what's the reason behind that? And it all sits around family. And it's around their children, their grandchildren, helping the bank of mum and dad we're hearing about increasingly these days, helping with school fees for the grandchildren, etc. And so it's looking at these areas. It's about passing on the opportunity with guidance and giving security whilst it's still in their lifetime. And so it's the philanthropy is part of that, but it's vastly different conversation now than, say, our parents and our grandparents before that.
I think, and I speak to a lot of advisors, Peter, we never know what's going to happen. How much is forward planning, talking to your family about what you want to do, that whole sort of stewardship piece, really, really important?
I think starting the conversation is the first part. And it used to be, well, we don't talk about money in our family. But when we're now talking about transferring quite sizable amounts of wealth, there's money in transition today. A lot of people are retiring with significant wealth compared to, say, 30, 40 years ago. They're inheriting wealth from their parents. They're downsizing, selling businesses. So what we call money in transition. So what the conversation now is around setting boundaries. And the goal of the conversation is not about you're entitled to some of the family wealth. It's actually about empowering them, and understanding the family values. What is our family? What's our purpose? And it's those conversations around setting clear expectations around the why, what our family stands for, and the how, and that makes a huge difference. And so in some ways, the conversation has moved away from, as I said before, entitlement to saying this is the way the family want to steward our wealth. And we're now starting to involve you and pass that through to you with guidance so that there's an understanding of what the family values are.
And what about when miscommunication or conflict arises? How do you sort of navigate that?
So it comes up quite often, doesn't it? And most beneficiaries think they're entitled to their equal share along with their siblings. And really, it's an interesting one here is that succession and fairness is an important point, but it doesn't mean that you're entitled to that. And so some of these difficult conversations around, we're working with, if I can give you an example, we're working with a major client at the moment, 3 children. The eldest child has been deeply involved in the business for a long period of time. The family also have some other investments in investment properties. But the family believe, or the parents believe, that the eldest child who's been working in that business, it's appropriate for them to continue on with the business. And then what we call estate equalisation, some of the other assets have been moved through. But difficult conversations come. And in many ways, that's why it's important to have a neutral person facilitate these conversations, because they can be sensitive, they can be sometimes quite difficult.
Yeah, I can imagine it gets very, very testy. I think we've all heard of stories where even families that get along, when that comes to that piece, maybe not. So how do you sort of reframe, I guess, as well, the mindset too, particularly when it comes to the biggest intergenerational wealth transfer that we've ever seen?
I think, and I touched on it just a moment ago, I think it starts with families having this conversation earlier, understanding what's called a values conversation. What are the values of the family? And then understanding also what's the purpose of family wealth. And it's from that devising the financial strategy. And so in many ways, a valuable piece of advice for those that are listening is start the conversation early, and involve all the key people. And so you don't want to get to a point where conflict, miscommunication, unclear succession planning, it often, and we've seen that and we know about that in the past, and it can destroy more wealth than market downturns will ever do.
Yeah, speaking of destroying wealth, and I know none of us have a crystal ball, but if we are in this really big intergenerational transfer from the boomers to, say, Gen X or millennials, what about the generation after that? What is the risk there?
We've heard the saying quite often that the first generation build the wealth, the second generation sees the sacrifice that was done that and maintains that, and the third generation often see, well, it's a sense of entitlement to build, to just enjoy the benefits of that. One of the key areas here when it's moving down to younger generations is reflecting on or engaging with broader family conversations, bringing the grandchildren into that. Giving them little projects. We've done that with a number of areas where teenage children are given a project where the family's starting to move in philanthropy, charitable giving, and they ask their grandchildren to go away and do a little project and come back and present to the broader family of why and they should donate $5,000 or $10,000 to a particular cause. So it's building this education and doing it earlier, and we're finding that is wonderfully powerful. And increasingly, families are going away for family weekends and talking about these areas and developing a charter or a constitution for what the family represents, and as I mentioned before, its core values.